Welcome to Subramani. Swaroop Mohanty of Mirai asked, what is this certainty being priced into the market? So I thought that was a good question to address because in the market, when you buy, the best prices you get is when there is uncertainty in the market. So you take March 2020. We had no clue what is COVID. We did not know whether the world will come to an end, whether how many people will die. If you read the Western press, half of India should be dead. They said Indians will die in crores. They just took some numbers from somewhere and extrapolated. And a lot of Indians were very happy to tom it and said, oh, this will happen. I was personally not very sure about whether the SIP figures will continue. There were a lot of uncertainties. So you just look back, if you had bought in March 2020, the market would have, some shares have gone up 5x, some have gone 2x, but nothing has gone less than 2x or 3x, right? Very few, some companies whose business went for a toss, they may have gone off, but otherwise most of the companies, whether you bought a Tata Steel, Tata Motors, Tata Power, doesn't matter, or whether you bought MNCs, everything has gone, has double, triple, gone 5x. Right, something which I bought with gone 5x would be EID Parry. I got it at 110. I also exited it at 270 or 280. Now it is something like 540. So it's a 5x, right? So all these things happened. If you take 2013, the markets were uncertain about who will come to power, but suddenly somewhere the market, through some way, the market has a capability of finding out that Mr. Modi is the person who is going to come in, and so market did not wait for the elections and election results. Market has already started pricing in Mr. Modi's entry into India, and the promises were huge, so they thought, oh, this man is going to work magic, and the market had started moving up in 2013. So 2014, when he came in, that was a great time to be selling. Repeated selling, because when there is certainty, markets are expensive. So I actually sold a lot of PSU shares as soon as Mr. Modi came in, because I was convinced that markets will go down from here and I will be able to buy the same shares, and as and when Mr. Modi does something, the markets will reprice it, right? So when there is height of uncertainty is a time when you need the maximum guts to buy, and that gives you the maximum return, provided you stay on till the full juice is extracted. Now suppose I bought EID Parry at 110 and I sold off at 220. That was fine, that was a fantastic deal. I bought it because it went down and I sold off at 220. But I did not get the full juice of waiting till 550. And tomorrow if it is 660, then even better that I could have waited till 660. So when to buy, when to sell is difficult, but very clearly when there is uncertainty, like when is Russia's horrid Ukraine invasion going to end? Or how much will we bleed through our nose paying for petrol and diesel and gas, right? Or how much, when will Germany stop buying from Russia? We have no answers to any of these things, right? So somewhere there is uncertainty about the war. There is a lot of uncertainty about the China COVID problem. Again, there is lockdown happening. So what will happen to the Chinese economy? What will happen to the world economy? We will once again experience the shortage of semiconductor chips, etc. But the market in its wisdom thinks even if it does happen, it's going to be a short-term thing. So don't bother. So now the question is, what will happen with the US interest rates going up? Well, the US interest rate going up is already priced into the market. It was very clear, because when they actually did that 50 basis points increase, the market had a relief rally saying, okay, now let's move on, right? So that's what will happen. That's what exactly happened even in India. Yesterday, I'm talking about this on the 5th of May. On the 4th of May in the evening, there was an announcement of a 40 basis point rise in the repo rate. So the market did panic because this happened slightly pre-closure. But what had also happened was the market knew that something like this was coming, right? Don't ask me how the market knew. Did the market know that it would be 40 basis points and not 400 basis points. Sorry, they knew it was not 50 basis points. No, I don't think so. Nobody is able to predict that perfectly. But when there is uncertainty, what will China's new COVID problem create against sticky supply chains? What about interest rates hike? What about gas pricing, or whatever? All that, all those uncertainties are there. What about the American midterm election? Again, there will be noise. What about the Gujarat elections? I think the next big election due is Gujarat. UP election brought uncertainty, but in UP also, by the time the people start giving you the market poll and the market starts rallying, the market does not wait for complete certainty. When there is uncertainty, there is panic, but slowly as clarity emerges, the market goes up like this. It's really a vertical climb. So when there is uncertainty, you should be buying. When you buy at maximum uncertainty, you make the maximum money, provided you can wait till maximum certainty, right? It is maximum certainty which gives you the worst price for buying and perhaps the best price for selling. When every problem is solved, right, and from here the market has moved here, that is the time. Of course, I'm not even claiming credit for EID Parry, because also the sugar cycle and all that happened, so I'm not even mixing the two. But times of maximum uncertainty, it cannot be immediately priced in, right? So March 2020, on say 15th of March, there is COVID case here or there. Slowly it starts, but once it hits the headline, or the Prime Minister makes a statement, or it's an international statement, or they say 5 lakh people died in China, or anything like that, then suddenly it hits you. The press plays an important role, the blogs play an important role, some very respected bloggers can talk about it, and the market will panic. So same thing will happen anytime there is a rumor. So whenever there is a rumor or something like that, the market always will panic, and at the maximum panic, when you buy, you get the best results. So market hates uncertainty, that is true, but market likes lifting of uncertainty. When uncertainty is slowly getting clarified and moving towards certainty, it's also a good time to buy, and at perfect certainty is a time to be selling. This is for timers in the market. Another thing which I told Swaroop on Twitter also is saying, I realized one thing, that more than understanding market timing, etc., understanding compounding, that over 20, 30, 40 years, if you find a good fund manager, or you can yourself build a good portfolio, that is far more important than worrying about what Putin will do and what Mr. Modi will do. It doesn't really matter. Don't get into macro. There I'm on Peter Lynch's side, that if you spend 10 minutes on macro, you wasted 7 minutes, right? So any of these uncertainties, you will know there is uncertainty. What is the impact on each and every company, to be able to understand it and understand the implication, and therefore how the market will react, or will there be a relief rally, or the market will say, oh, we knew Putin is going to attack, so now what next? What it will do is very difficult to guess and very difficult to gauge. So has market priced in the let's say there is going to be sanctions by the US? Doesn't really matter. Does it matter to I have always said, and I think Ken Fisher also says this, and many people have said this, the sanctions are supposed to hurt the dictator, whoever it was, Fidel Castro, now maybe Putin. The anger of the US is against Mr. Putin, and who is suffering is the common man in Russia. So it does not really help. The sanctions don't help. You have sanctions, but Germany needs fuel, so Germany is buying fuel from them. Fuel is available at a discount, so China and India will buy fuel from them. So does the sanction really hit? We don't know. So if you thought that the sanction was going to hit the commodity market, the commodities would go through the roof. When commodity prices go through the roof, the sanctions start failing, because goods will move from point A to point B. There was a time when Indians could not trade with Pakistan. So Indian betel leaf would go from India to Dubai, and from Dubai to Pakistan. India could not import gold, so all the gold would be imported to Dubai, and from Dubai it would be smuggled here. The market finds a solution for all these Mickey Mouse rules which governments make, right? So I don't think sanctions is something to worry about. Markets will price all these things very quietly and subtly. Will they do it on one day? No. Will they do it 1 minute? No. They will do it slowly and subtly. You may not be able to react to that. you do your SIP, you build your portfolio, you think steel is in a good run, you buy steel, you think steel is fully priced, then you sell steel, if you want to do all those things. Otherwise you say there is a fund manager, he has a team who will do it, so just go put an SIP in his fund and see over 20-30 years what kind of results those fund managers have returned to you, right? So I have done that. I have found the benefit of talking to those fund managers. Some of them are of course brilliant, and you also build your own portfolio, because there are certain shares which a fund manager will never be able to buy. Will a fund manager be able to buy a Bosch or a Procter and Gamble in his main portfolio? No. Of course, if he has an MNC fund, he might go and pick up, but otherwise in his main portfolio, he will never be able to pick up some of those shares. So those shares you buy on your own. Don't wait for that when will uncertainty come, when will it be over. It's impossible for you and me to guess. But yes, when you find there is tremendous uncertainty, market has the bottomed out and things like that, that is the time when you need guts to buy. So in March 2020, the best thing that you could have done was buying. The second best thing was to say, okay, I think there is so much uncertainty, I will do nothing. That is still very good. The worst thing you can do is sell during uncertainty. So don't sell during uncertainty. What is fully priced, what is not fully priced is difficult to say, because maybe we have priced in the Ukraine war, but we may not have priced in a loss for BJP in Gujarat. If BJP were to lose in Gujarat, I am neither supporting BJP nor anti-BJP, but I am just saying, if BJP were to lose in Gujarat, what would be the impact on the market? What would people think? Would people think, oh my god, now 280 seats for BJP bad in the 2024 election? I don't know, because market will think, oh, now this man has controlled so much, so he has to get 320 seats. So instead of 320 seats, if he gets 280 seats and he's got his friends, NDA itself is 320 seats, what will change? What equations will change? We don't know. So all those things will come into the pricing. So markets will go up, markets will go down. Don't bother too much about that. But yes, Swaroop, the answer is uncertainty will be there in the market. When uncertainty is at its peak, you get the best price. When certainty is at its peak, you get the worst price for buying and the best price for selling. This is for people who time the market. I am absolutely useless at it. So I can only make a video. I don't know how to time the market. All the best. Thank you.